Good morning, folks. Mayuresh Joshi here. Can you hear me properly, and is the video visible? If you can give me a few yeses for the same, so we can start in the next minute or so. Yeah, cool. Thanks, folks. Thanks, guys. We'll start in a minute. Some more guys are joining in. Good morning, everyone. Mayuresh Joshi here. Thank you so much for attending pre-bell with William O'Neill India. A very clear disclaimer. Anything which comes in terms of stocks, which we might discuss in this presentation, is just from an educational perspective. I think we make it very, very clear on that perspective. And it's definitely not a buy or a sell recommendation. So I think yesterday's move was massive, right, guys? And the Nifty chart is indicating the same. The large consensus till pre-bell yesterday was largely a confined trade for the Nifty 16,800, 17,800, max of 18,000, where there was a lot of resistance that was expected. But with the news that came through just before opening of HDFC and HDFC Bank's merger, I think the whole dynamics of the market movement changed in a span of 5 minutes. Obviously, we have come out with a note on the dynamics of the merger between HDFC and HDFC Bank. Please visit our site, MarketSmith India. Under the research section, you will find that note, which is very useful in terms of analyzing how these two elephants are probably going to dance in the room. So the elephants did dance yesterday. Will they continue dancing? Is a matter of time as the merger processes take place over the next year and a half. So I think brilliant move yesterday, solid volumes. So an additional FTD of sorts was accounted for, which means that the base for the market has been very well established of the intermittent flows that we have created. Obviously, pockets of strength are now emerging across. But my whole perspective in this market is that the earnings season is going to start in the next couple of weeks. We've seen input cost inflation go through the roof, both from the crude and the crude derivative perspective, but the ancillary and the second round effects, that supply chain constraints because of the Chinese lockdown, inflationary issues for a lot of commodities across the globe, they're actually going to cause a huge amount of havoc in terms of margins. And the inflationary data is indicating the same as well. So look at the Spain inflation data, which came at a decadal high, German inflation data at a decadal high. And again, I think the market move has been surprising in the backdrop of yields actually inverting. So if you look at the 2 and the 3-year-old in the US market and the 10-year yield, the inversion of the yield curve probably is indicating that the bond markets are fearing inflationary risks to be very, very sticky. Corporate earnings and overall GDP expecting to take a big hit. And therefore, I think how the markets move, though excellent from an equity investor's perspective, I think you also should be very, very selective in sectors which will be less prone to inflationary risks. Among the major news that happened post-market or post-market close yesterday, TCS has signed a huge multi-million-dollar deal to accelerate their entire cloud transformation journey. So we already know that the market size, specifically when you're talking about cloud transformation, automation, is huge. So TCS winning this huge multi-million-dollar deal is going to have a huge rub-off effect, just not on TCS, but a lot of players, because earnings will also be due. And Accenture has already laid a base a couple of weeks back in terms of a strong guidance, upping their guidance, laying a base for our Indian outsourcers who follow Accenture's model to probably replicate the same. So let's see how these companies perform. Tata Motors has emerged as the third largest player. They report the highest sales unit yesterday. Moil's production was flat. If you probably look at almost flat, 8% is a reasonable growth, but at 1.2 MT, the realizations improved and therefore 22% year-on-year growth is brilliant. GST collections have shown solid amount of stability. So I think on the fiscal deficit concerns, GST collections showing stability, direct tax collections also having a large say is going to have a huge impact. Both FIs and DIs, not surprised because of the last few days, FIs have been building up reasonable positions and then covering their shorts quite aggressively as well. So they were aggressive buyers, both of them into the market. So I think institution buying was reflected. Maybe because of the under ownership, you might say, in terms of ownership of stocks like an HDFC. But I think
your slides are not moving.
I know. I'm on the same slide.
Okay.
And crude was at 109 per barrel, showed a slight uptick yesterday, and the USD INR has been stable at 75 and up. This is how the global indices moved. Dow Jones was largely flattish, but Nasdaq, being a growth market and a growth indicator, a lot of tech stocks moved significantly. Nasdaq was almost up to 2%. Asian markets flattish at this point of time, and expected to be mirroring what the Dow and the S&P are largely doing. SGX, because of the huge institutional interest, a lot of shorts have got covered yesterday. I think 18,000 was a critical resistance that got taken out significantly. So 18,200 is the next resistance for the market. Do we hit all-time highs because of the increased activity seen in the Indian market? This is something to be seen not just today, in this week and next week's trading session as well, but 18,200 is an indicative tick, is what we are probably getting. Charts of the day. Again, I think banking had shown a huge amount of resilience, banking and financial services yesterday, both because of HDFC Bank and HDFC. State Bank in the zone as per the O'Neill methodology. The price strength, the RS strength as we call it, is a little bit on the lower side. But I think this is one stock that you should probably be keeping on the radar as well. 2-3 interesting facts. One, in terms of asset quality, a lot of pressures have actually got absorbed onto the balance sheet during the entire COVID period. What you're also expected to see in terms of advances growth for the industry as a whole. And if you look at the PSU space in general, the provisioning that SBI has done, the kind of expectations that one has on the loan growth itself, not just for this quarter, in the coming quarters as well. And even if we are ever having a rising interest rate scenario, banks should be in a far more comfortable position because they will be repricing both their assets and liabilities. And a strong liability franchise never hurts, which SBI has at almost 48-49%, close to HDFC Bank as well. So I think this is one of the banks that we probably are keeping on the radar as well, along with Axis Bank as well. So significant reductions, specifically on the GNPA part for Axis Bank. What they have probably done in terms of acquiring Citi's business, and though some of the street participants feel that the acquisition was a little bit on the higher side, I think they are organically and inorganically trying to increase their base. And they've got a very qualitative base which will come in from Citi's customers as well, both on the credit card side, which is the unsecured lending for the bank. If you would have seen the stats, HDFC Bank very aggressively in terms of credit card, unsecured and corporate lending as well. A similar pattern can be probably observed for Axis, but very qualitative consumers and customer profile that will come in through the Citi franchise as well. And generally, I think for the banking industry, specifically the private universe and space, this should probably hold up with better quality earnings being reported. A little bit away from the pivot, but our entire sense as price strength picks up and some stability is observed, banking probably comes onto the radar, so Axis probably stays on the radar as well. A third stock which we probably feel that should be on the radar as well. It's a significant way away from the pivot, but wanted to point this out. The unlock rate that we all speak about, hotels, exhibitions, travel companies, baggage companies. So Mahindra Holidays obviously falls in that slot as well. Dynamics obviously improving every passing quarter for the stock in consideration. What you're probably seeing in terms of the O'Neill parameters, RS strength is lagging, but as it comes near the pivot with increased volume action, And if that gets reflected as it comes near the pivot over the next few days or weeks, whenever that happens, RS strength will definitely show improvement. And all the other parameters are actually having a huge positive sign. You look at the EPS strength above 80. Buyer demand is exceedingly good at this point of time. No issues with group rank. And the kind of capex that they're probably doing in terms of opening new properties, the kind of channel checks that we've probably done for the hotel, resort, leisure industry as a whole. You try booking yourself on any sites on a weekend, you'll probably not get any slot on a weekend over the next 2 months as summer season picks up speed. And therefore, I think Mahindra Holidays very aptly placed on the O'Neill lens and O'Neill parameters as well. With this, I think I call it a day for our pre-bell at this point of time. But interesting times for the market. 18,000 has been taken off. 18,200, we are almost close to taking that off as well. Do we touch all-time highs? Is there good times that might continue for the broader index as well? Broader index also doing exceedingly well. But again, have a stock and a sector-specific approach. Broader markets, only the strongest breakouts should be considered as we fulfill our criteria for both the Cancelin and the O'Neill lens. And earnings is going to be key. So I think be very watchful. But yes, markets are in a strong momentum at this point of time. So let's enjoy the markets with the momentum that they are in. Thanks, guys, for watching. Take care. Have a good day.